So thank you all for joining us. My name is Mark Votman. I'm one of the co-founders of GovTribe, and I'm talking today with Brandon DeBilla and Dave Ban from StreetShares. We're going to be talking a bit about government contract financing. One of the things that often comes up when speaking to some of the younger companies on GovTribe is making that leap from being a sort of small player or a subcontract in the government space to competing as a prime and starting to really grow into a sustainable revenue model in government contracting. And a lot of times that requires resources to staff up or to grow your company to take on larger scoped contracts, which for a lot of companies means some sort of financing option, small business loans or something like that. So we want to talk today with StreetShares about some of the challenges associated with that process and basically just how that whole process works.
Sure. So I'm Brendan DeBella, VP of Development and Strategy for StreetShares.
Dave Ban, VP of Sales here at StreetShares.
Yeah, we thought one of the best places to start in this kind of discussion are really the types of funding. We could step through that first if that's practical. Mm-hmm. So some folks are already aware that banks serve this market to some degree. We started out as a small business lender, certainly work with government contractors now because veterans are so much in that. And banks are terrific institutions. We're very familiar with them. The trade-offs or challenges that can be with bank financing is even though loans and lines of credit are available from there, it can take time to apply for those kinds of products, and there's a lot of information that can be asked for. When we do think about bank loans and lines of credit, we often think of them as either secured or unsecured, right? Secured being that someone has put up equipment or property to get that kind of product. Unsecured, you haven't had to do that. But that's why we often talk about, I think probably asset-based lending is one of the notes that you had there, right? So again, banks can be a source, loans and lines of credit, but you can be asset-based, and that's really where it's more secured. There's a couple of other things as well. Maybe if you want to touch on them, Dave?
Sure. In StreetShares, we're trying to provide the full spectrum of all these options for customers to have financing. So we talked about term loans, lines of credit, asset-based. One of the biggest ones is in the space of government contractors, the need for contract financing or invoice factoring, as many folks would call it. So that is the ability to, when work is completed on a federal government contract or a large commercial contract, the work's completed, submitted, and then you can advance up to 80-90% of that invoice amount on the actual invoice. Purchase order financing is when a large corporation sends out a work order. So, for example, maybe Walmart says, "Hey, I need 300 pieces of this equipment. Deliver 300 pens to me in a few weeks." And then you take that piece of paper and you say, "Hey, finance company, can you advance me on these funds? Maybe a percentage of that." So you're advancing funds before the work is actually done.
Right. So invoice factoring is an invoice has been sent out to the customer. In the case of government contract financing, sent to the government typically, or perhaps if you're a subcontractor, sent to your prime. Whereas purchase order inventory financing would be more for goods purchases contracts, where either you are purchasing the products if you're a wholesaler, maybe purchasing the raw materials to produce something if you're a manufacturer. Right? So why don't we talk a little bit about the type of lender and what types of vehicles they tend to steer their borrowers to.
So back to banks again, terrific institutions, low cost of capital, right?
Yeah.
Bank loans and lines of credit are incredible because they can be very competitive cost options. Again, the trade-off there coming directly from them is typically the information they may require, the time in business they may require, the lead time of getting that funding. I'll touch a little bit here on the SBA too, right? The SBA has a terrific loan program, but the key concept there is the SBA is not a direct lender. For folks that are veterans and are familiar with the Veterans Administration VA loan program, it's a similar parallel there, where the VA is not a direct lender to somebody buying a home with a mortgage product, but they will guarantee that loan through the bank. Similarly with the SBA, they are helping to guarantee this business loan program, a great program. A bank is going to be the source of that SBA loan, but again, that theme of how much time is going to be required for that application, can you wait, perhaps what could be months, and everything that's required with that.
And the SBA will be the cheapest form of capital. So
Right.
the SBA is co-guaranteeing that loan with the bank, a percentage of it. And so that's, if you can get an SBA loan, if you've been in business long enough and you have the cash flows and you want to spend the time it might take and add all the covenants with the bank that it might, require, then that's your cheapest form of capital.
Right.
Yeah, another category, this advent has only been in the last few years, are online lenders. And StreetShares, for lack of a better description, fits in this category. Honestly, StreetShares is down on most of online lending because we feel like it's a little bit of wild, wild west. I'll explain more what I mean about that. Online lending, where the lenders are neither a bank nor a credit union, are often known for tricky terms. What do I mean by that? Perhaps there's penalties to prepay a loan, very high rates that are not quoted in a transparent way. So although online lending has brought capital quickly to small business owners and contractors, often quicker than established institutions like credit unions or banks, it's been those kinds of trade-offs. And StreetShares was founded to really be the antithesis of what we see as the bad practices in online lending.
And taking a step backwards, if you think about why these online lenders exist, one, technology, but two, after the recession in 2007, 2008, banks largely pulled back from lending in this space. And for them, it's the same cost to do $1 million loan as it is for a $20,000 loan.
Right.
So they're going to stay away from that. That allows kind of all these market entrants to come in, good actors and not as good actors.
Yeah, I'd like to get back to sort of what to look out for to know if you're dealing with a payday loan type of lender. But why don't you tell me a little bit first about the specific sort of product, the three-pronged product that you are targeting toward government contractors?
Our products are unique in the sense that there's a lot of folks that just do the term loan, line of credit, and then just do the factoring fee. So we have kind of the full spectrum from when you first get that contract or an early stage business up until you're doing a couple $1 million, even a month in revenue.
Right.
So the first one would be what we call the mobilization loan, and that is an opportunity to, when you get that first contract, you're thinking about that contract and bidding, we can do up to $100,000 or maybe a little more on helping you hire some folks, buy uniforms, buy equipment to get ready for that work you're going to perform on the contract.
Right.
And then once you have those invoices, we can do the factoring portion, the government contract financing, which is advancing you 80-90% on that receivable once it's been verified. After that, there's kind of this also in between those products is this flexible line of credit. So you can draw down on an increased line of credit with really unlimited amounts where you can, if you need to make payroll in between waiting for an invoice, we'll advance. You can just draw a line of credit and we'll pay you those funds. And then instead of making payments back every week or every month, we'll just pay it down with the invoices that come in.
Okay, so the three prongs then are the mobilization funding. So you just won your contract, and before you can send out your first invoice, if you maybe are a 3 or 5 man shop and you want a contract that requires 10, 15 FTE to do your initial hiring, to maybe get larger office space or deal with transportation costs or something like that. That's what the mobilization funding is for.
Correct.
Then the invoice factoring helps you advance on salary. You can get paid if you sent out an invoice that's got maybe terms of net 30, net 45. You get that money up front with some sort of a discount.
Correct.
And then the bridge financing would be if there's time in between invoices or something like that where you need to have additional cash on hand. That's what the line of credit is for.
Yes.
Okay. So talking a little bit about, all right, so what do companies need to know? At what point should they start getting ready to prepare for financing if that's something they think that they're going to need?
Well, we would say that there's no problem doing it as early as possible, really, to understand exactly what kind of products exist in the marketplace. We've talked a little bit about that. But also understanding that there's things they can do when they're competing, even before being awarded. And I'll give some specific examples here. One is this key concept of a financial capability letter. I'll go back to purchasing a home and the VA mortgage example there. You always appear as a stronger buyer when you're shopping for a home, when you have a letter in hand talking about your own financial strength and your capabilities. A prospective seller will always find that attractive when you come looking for a home with that kind of thing in hand. Similarly, as a contractor, if he or she has a financial capability letter, basically a letter stating that they have the capabilities to deliver on what they're competing for, buyers often find that attractive. We provide those letters for free here. It's a very straightforward process to do a little bit of a financial health check on a contractor, and I would encourage all contractors out there to be aware of financial capability letters. Think about them early in the process. Again, knowing what products exist and what they need to access with that. We talked a little bit about the kind of financing that exists there, but also be aware there are predatory products. I haven't touched on this yet, but merchant cash advances, for example. We don't like those kinds of products. They're very expensive. We find some contractors fall in the traps of getting into those because they've waited too long. They've become desperate. They've taken them. We don't like that. When it is also thinking about your position, what kind of costs are going to be incurred? Because winning an award is a very exciting time. Contractors want to do that. But what they often haven't put their arms around, and we find ourselves doing it with them on the phone here, is computing exactly what is it going to take to execute on that contract, right?
That's a great point,
It's a personnel-intensive contract services. We talk about wrap rate, right? What is that hourly bill cost going to be? So starting kind of from the ground up in that,
And when are those costs going to be incurred?
Exactly, because you could be, for example, a subcontractor, not a prime.
Yeah.
Then you're waiting on that prime's terms to pay you. And suddenly when you step through this calculation of, well, what is it you need to do? Coming back to personnel, we often hear from contractors when they find the right people, they should hire them. You don't necessarily want to wait and try to stagger that hire. The people you may need or may not be available. Great people are expensive and hard to find.
Yeah.
So you find them in advance, you've hired them, maybe you've put them on payroll for a month or two, you're getting anxious, even more tension because you haven't even begun to invoice for work that maybe hasn't even begun yet.
Yep.
Suddenly you're stepping through a calculation that could take you through 1, 2, 3, 4 months in a worst case stress test scenario. That's the kind of thing that we step through with contractors on the phone all the time or in meetings to help them get their arms around what costs they're facing. Because then you've got to couple with that the products that you exist and find who you can trust.
Yeah, definitely. So the financial capability letter, this is a product that you'll do the financial check. You'll go through the other items like the cash flow statements, tax returns, credit score.
That's right.
And then the financial capability letter is actually something that the vendor can submit with a bid package when they are putting in proposals. So if it's clear to the agency, let's say, that that their quals reflect that they don't quite have the resources, the staff to perform this contract they're bidding on, the financial capability letter indicates that they have now a resource to draw upon in order to staff up.
Correct.
Those resources.
And we provide that. A lot of financial institutions provide those letters, so it's a chance to. I don't know if every contract needs it, but many have a requirement in there as you submit your bid. Do you have financial capability to cover that contract? And so it's a good idea to get that in place with the lender that you already have a relationship with, that you can have proof to saying, if I win this contract of maybe $5 million, I can support that with financial means.
Right.
And other things to think about that'll be part of that process, right, is getting your house in order with respect to, not surprisingly, lenders like ourselves will want to see bank accounts, right?
Yep.
At least 3 months, if not 6 months. Certainly taxes are important for both the business and the person. Thinking about your own personal credit, right? Some good news with contract financing and contracting is it's relevant credit, not necessarily somehow the main linchpin of what's going on. Good credit is always good to have.
Yeah.
But be aware that can be looked at. Again, it's not necessarily a showstopper with what's happening with that. But again, having the financial statements in order, whether it be the balance sheet and P&L, very important. Thinking about them early and having them ready to go, it just eliminates surprises and helps you be prepared later.
Okay, so I wanted to talk a little bit about the types of contracts that lend themselves to the different types of financing. So, we can talk about things like, where the contractor is in their level of experience. So, a lot of our users who start to ask questions about this sort of thing are companies that have, some experience, some government contract work under their belt. Possibly they got a bite out of a bigger contract as a sub. Maybe they, are a small shop, few people. And now they're trying to make that leap to establish Prime. that seems to be a good model for the type of product you offer in general for invoice factoring, especially if it's a services-based contract. Are there other things that you look for?
I'd say the biggest one is all contracts are good, and that's why we have this product. Others like us have this product.
Yeah.
The ideal is probably as you mentioned, a services-based contract. So time and materials. I've done the work. It's technology or it's some kind of maybe like security services, janitorial services.
Yep.
Work's been done. I submit payroll, and that's verified within a few days. Versus sometimes equipment. So if I'm delivering goods for an aircraft, I submit it. It sits in the dock. It gets verified. It can take longer.
Mm-hmm.
So you want to think about those things, and then also the type of contract. So is it firm fixed cost price? Is it
right.
Like for example IDIQ, indefinite quantity, indefinite delivery? Those will take. That's a good contract, but you want to make sure you have a task order on that contract to make sure there's actually work to be done.
Yeah, I'm glad you mentioned that because the difference between a time and materials or labor hour, as they're sometimes called, those are, you have a predictable invoice schedule, right? So you invoice monthly or something like that, so you know when you're going to be able to count on that next tranche of financing. Whereas a milestone-based or deliverable-based fixed-price contract, there's a lot more uncertainty in when you're going to be able to invoice, when the deliverable or milestone gets approved by the contracting officer or by the technical representative. Also, like you said, IDIQs. One thing that we often talk about is understanding first of all, the difference between the total award ceiling for a contract and the ultimate executed amount, the amount actually funded to a contract. And this is a sort of research you can do on GovTribe, and we can demo that a little bit. But you can see for a specific market segment, maybe you're looking at Department of Veterans Affairs contracts in software development in the Southeast or something like that, and you can see on average the types of contracts that are awarded there, the way that they are priced, if they're typically labor hour or fixed price, and you can see the average funded amount versus ceiling amount, which is all good in determining how many resources you're actually going to need and what the contract's worth, right?
Right.
Yeah, we use GovTribe every day. We use it to look at those type of things. So here's a new contract our client has, and we want to fund that. What's the actual rates of normal usage on these contracts? And so it's a very, very useful tool that we find valuable.
And we talked a little bit about timing, and like you mentioned with IDIQs, you can spend 6 months winning an indefinite delivery contract, and then you can wait another 6 months for the first task order to be issued. So understanding the timing of when you need to staff up, when you need those resources is an important consideration. So one thing that we, whenever I do webinars or interviews with other folks in the industry, I like to get their sort of unique perspective on the types of companies, the characteristics of companies and individuals who are trying to enter government contracting or trying to grow into some sort of a new role or new position in the industry. The characteristics that you see as making them successful in their efforts to do that.
Yeah, I would definitely say, the thirst for knowledge is an important thing, right? Whether it's knowing how to use GovTribe and find the resources that are there, like we talked about earlier here, becoming educated on what financial products exist, trying to think about those costs, thinking about, again, ways to kind of break orbit, if you will, from the new entrant, right? Could it be that you're teaming with somebody, thinking about that, perhaps in your own personal network you're finding that, the financial capability letters, things that make you look a little bit bigger than you are, right? Again, understanding exactly how to compute cost, coming up with your trusted advisors, candidly, right? We try to be a trusted advisor to the different contractors that we talk to, and financial services is often predicated on trust. It goes so much farther than anything else, and so that's what we try to establish in a lot of our discussions.
Yeah, and then just cash flows, character, and credit are the three things commonly talked about with lenders. And so cash flows, doesn't have to be cash flow positive every month, but at least make sure there's decent cash coming in. With factoring, you can move around that because you have an invoice at some level. With credit, as Brendan mentioned earlier, but just making sure you're on top of that. There's a lot of great sites out there that can help you monitor your credit for free. Most banks have that now. There's sites like Credit Karma, because you want to avoid small little things like a collection or a tax lien that can just hold up the process. and then character. Where every lender's looking at the individual. We actually do social scans on social media, so LinkedIn and Facebook, and so you want be aware of what's out there on your social profiles, and think about your Yelp ratings if you're a retail business,
right.
because there's a lot of data out there, so people are looking at that as well.
All right. So one last thing I wanted to just quickly talk about before we wrap up is, we haven't talked about this, but your financing model that has another side as well, the financiers. You're actually sort of an investor-funded lender, right?
Yeah,
Want to talk a little bit about that?
Sure. We very much see ourselves as a member community. I think StreetShares members here, almost as we enter August of 2017, almost 40,000 members. It kind of comes back to the themes of online lending, or what makes you special. So one of the things that was key to us in StreetShares was not to just be a hedge fund connected to a website, if you will, right? How do we actually come up with a community that is truly sourcing capital, that is very competitively priced for this lending that we're doing? So if we really want to, mean what we say, it's harnessing the power of individuals in the country. So a unique thing about StreetShares with the Securities and Exchange Commission is an approval whereby we can literally crowd lend, for lack of a better word, from individuals, regardless of how wealthy they are. That those descriptions, of course, being accredited or unaccredited investors. So literally, someone can come to StreetShares.com and with as little as $25 up to $100,000, earn 5% interest over 12 months. We take all of those pools of capital, those thousands of people that have given us millions of dollars. We harness it out for very competitive lending at those rates. So it's important to us to have the strength and the numbers of the members to only be finding lower cost dollars wherever we can, so that we can really, like I say, deliver on what the promise is of StreetShares, to not have the bad practices of online lending, to only have the good ones, to create products, the term loan, line of credit, the contract financing, mobilization, deliver what both the veterans and the non-veterans have been needing in this product space, and really capitalize on that.
Yeah, and it's all, the entire thing, you can apply for a loan on your phone, someone can come in and invest on there.
Yep.
And the neat part about that is, you can put, if you have funds, you can put that in stocks, bonds, but why not invest in veteran business owners, or just business owners across America, and watch their businesses grow?
Yeah.
And then the other side of that, if I'm a government contractor, I know it's not just bank money, bank deposits backing my loan. I've got these anywhere from 30 to a few hundred, investors backing me. One clarification on that: we are the direct lender, so the actual note is from us, StreetShares, to you, and then we disperse those fractional payments back to the investors, whether accredited or non-accredited. But very unique model, which is creating social capital within investors,
and backed by a sort of a unique technology approach as well.
That's right.
Right.
Which is why. So, and this is actually why the way GovTribe got connected with StreetShares is I feel like we're the two companies that are taking a sort of a new technology approach to an industry that maybe is a little slow to adopt new technologies. And we have our customers tend to be folks that are in about the same level of maturity in the industry. Right. The majority of our customers. So that's why I thought this would be helpful to our users. So I hope you all found this helpful. I want to thank again Brendan and David for taking the time to chat with me today. And if you all have any questions, you can email me at marc@govtribe.com. And I will put emails for Brendan and David in the follow-up in the blog post for the recording of this webinar. Thanks very much.
Thank you.